December 2024 has been a strong month for the stock market. Major indices like the S&P 500 are reaching new highs. This upward trend signals a bullish sentiment among investors. Several factors contribute to this positive market performance. One key driver is the strong performance of small-cap stocks. These companies are often seen as a barometer of economic health. Their growth suggests optimism about future economic expansion. This bullish trend is not limited to the United States. Global markets are also showing signs of strength. This indicates a broader positive sentiment in the global economy. However, investors should remain cautious. Market volatility is always a risk, and unforeseen events can quickly change the landscape. The recent U.S. presidential election played a significant role in boosting market sentiment. The election outcome brought a sense of certainty to the market. This stability is often welcomed by investors. The elected administration's pro-business policies are seen as favorable for corporate growth. Tax cuts and deregulation could potentially boost corporate profits. This in turn could lead to higher stock prices. Furthermore, the new administration's focus on infrastructure spending is expected to stimulate economic activity. This could create jobs and further boost consumer spending. These factors contribute to a positive outlook for the market. However, it's important to remember that political landscapes can shift. Investors should monitor the new administration's policies and their impact on the market. The Federal Reserve's monetary policy is another crucial factor influencing the stock market. The Fed's recent indications suggest a gradual approach to lowering interest rates. This measured approach aims to support economic growth without triggering inflation. Lower interest rates can make borrowing cheaper for businesses. This can lead to increased investment and expansion. For consumers, lower rates can make mortgages and loans more affordable, potentially boosting spending. However, the Fed's actions are closely watched by the market. Any unexpected moves could trigger volatility. Investors are particularly sensitive to signs of inflation, which could prompt the Fed to raise rates sooner than expected. The interplay between the Fed's policies, inflation, and market reactions will be a key theme to watch in the coming months.
One factor fueling market confidence is the recent uptick in corporate earnings. Companies across various sectors are reporting higher than expected profits, which is a positive sign for the stock market. This surge in earnings is often seen as a reflection of overall economic health. Additionally, consumer spending has remained robust, further supporting market growth. When consumers are confident in spending, it generally bodes well for the economy. However, it's crucial to keep an eye on potential risks. Geopolitical tensions and trade disputes can impact market stability. Investors should stay informed and be prepared to adjust their strategies as needed. In summary, while the current market sentiment is optimistic, vigilance is key to navigating the ever-changing financial landscape.
Indeed, the stock market is a complex and dynamic environment. Understanding the various factors at play can help investors make informed decisions. As always, it's important to balance optimism with caution to achieve long-term success.
When we talk about economic expansion, it's essential to consider the broader market dynamics. Europe, for instance, has been showing some promising signs lately.
Absolutely, and this optimism isn't just limited to Europe. We're seeing a ripple effect across various global markets.
Yes, and with the right investments, there's a significant potential for growth. Investors should keep an eye on sectors that are poised to benefit the most from this expansion.
That's a great point. Diversification and strategic positioning can make a big difference in capitalizing on these opportunities.
Exactly. It's all about understanding the trends and making informed decisions. The next few years could be quite transformative for many economies.
Indeed, and staying informed will be key for anyone looking to make the most out of this economic expansion. In times of global uncertainty, it's crucial to stay informed and flexible. We must analyze a variety of indicators, from geopolitical events to economic data, to understand the potential impact on markets. Absolutely. Investors need to adopt a strategy that balances risk and opportunity. Diversification and a long-term perspective can often provide a buffer against unpredictable market movements. Yes, and while it's impossible to predict every turn, having a well-thought-out plan can make all the difference. That's a great point. Staying calm and making informed decisions is key. Finally, some good news for investors. After a period of volatility, we're seeing signs of stability in the tech sector. Indeed, this stability can offer a much-needed respite and an opportunity to reassess and reallocate portfolios. Exactly. With emerging technologies and innovations, there are plenty of opportunities to capitalize on growth trends. It's a chance to look ahead and invest in the future with more confidence.
When it comes to emerging markets, it's all about identifying the outperformers. These are the companies that show strong potential for growth despite broader market challenges.
Right. By focusing on key indicators like revenue growth, market share, and innovation, investors can pinpoint companies that are likely to excel.
That's correct. It's about doing thorough research and keeping an eye on both macro and microeconomic factors.
And of course, being prepared to act when the right opportunities arise.
Looking ahead to 2025, investors should consider a mix of traditional and innovative strategies. Balancing blue-chip stocks with high-growth opportunities can provide a robust portfolio.
Good advice. It's also important to consider sectors that are poised for growth, such as renewable energy and technology. Absolutely. And don't forget about the importance of global diversification. Investing in different regions can help mitigate risks and capture growth from various markets. A diversified approach, combined with a forward-looking strategy, can set the stage for long-term success.
And staying informed about market trends and economic shifts will be crucial in navigating the years ahead.
Indeed, with the right strategies and insights, investors can confidently approach the future.